Imagine a metal that isn't just a shiny collectible, but the backbone of solar power, electric vehicles, electronics, and emerging technology. Now imagine one of the world's largest financial institutions quietly accumulating more of it than anyone else, while the rest of the market faces a growing shortage. This is the story of silver in 2025, and why many analysts believe we may be entering what some call a silver tsunami. Right now, the silver market is facing a deep structural deficit. Global demand has been outpacing supply for several consecutive years, and recent 2025 data shows that this imbalance is only widening. Silver production is struggling because of declining ore grades, higher mining costs, and strict environmental controls. Most silver is produced as a byproduct of mining other metals, so even if the price surges, production cannot simply ramp up quickly. This creates a bottleneck that keeps supply tight even as demand climbs. Meanwhile, demand for silver is exploding from every direction. Industrial demand is at record highs. Silver is essential for solar panels, electric vehicles, semiconductors, medical equipment, and advanced electronics. As governments push for clean energy and electrification, the need for silver becomes non-negotiable. Industries cannot replace it easily, and no major substitute exists that matches its conductivity and performance. At the same time, investors are flooding into silver. With inflation concerns, geopolitical tensions, and currency instability rising, many people see silver as a more affordable alternative to gold. Retail buyers in places like India have increased physical purchases dramatically, pushing both spot and futures prices to new highs. This combination of industrial and investment demand is putting enormous pressure on an already tight market. By 2025, this pressure has erupted into record-breaking prices around the world. Silver has surged over 100% in some markets in just months, outpacing gold's performance. Major vaults in global hubs like London have seen their inventories fall to critically low levels. Physical silver is becoming harder to source, with wholesalers reporting shortages and rising premiums. Some analysts are describing the situation not as a rally, but as a full-scale silver squeeze. And this brings us to JPMorgan. Over the past decade, the bank has quietly accumulated one of the largest physical silver hoards in the world, estimated at around 133 million ounces. This is more physical silver than the famous Hunt brothers controlled during their attempt to corner the market in the 1980s. JPMorgan's massive position gives it incredible influence. Whether they hold, release, or lend the supply could shift market dynamics instantly. Many analysts argue that JPMorgan's silver hoard is one of the most bullish factors for the metal. In a market where inventories are shrinking and demand is soaring, the presence of such a large private stockpile raises questions. Are they positioning for a future industrial supply crunch? Are they anticipating a currency shift? Or are they preparing for a price surge far larger than what the public expects? This is where the idea of a potential 500% silver price surge comes into play. It isn't a prediction or a guarantee, but a scenario based on how strained the physical market has become. If industrial buyers, investors, and institutions all demand physical silver at the same time, the paper silver market might not be able to keep up. If physical silver decouples from futures contracts due to lack of available metal, the price could spike violently. Silver is essential, scarce, and increasingly difficult to source. And with demand growing faster than supply, the pressure is building. Many believe that if current trends continue, the market could reach a breaking point. Over the past few years, silver has transformed from a quietly traded metal into one of the most strategically important resources in the world. As we move into the next phase of this story, the big question is, what happens next? If silver is already breaking records and supply is tightening, how far can this wave actually go? And what are the real catalysts that could push prices dramatically higher or stop the surge entirely? To understand what comes next, imagine the silver market as a system under pressure. Demand keeps building, supply keeps shrinking, and the forces holding everything together are starting to crack. The first scenario many analysts consider is the bullish one, where silver prices climb far higher than anything we've seen before. This happens if the industrial sector continues to expand. Solar power growth alone requires massive amounts of silver, and global clean energy commitments guarantee rising consumption. Electric vehicles rely on silver for wiring, sensors, and battery components. Even electronics and medical technologies continue to consume more silver with every generation of advancement. In this bullish scenario, the supply deficit doesn't just continue, it accelerates. Mining companies have struggled to bring new production online, and many silver-rich regions are facing regulatory hurdles, environmental pressure, or declining air quality. If new large-scale discoveries don't happen soon, the world may find itself competing over the same shrinking supply. At the same time, investors who missed the first wave of the rally may rush in, pushing prices even higher. This chain reaction could easily trigger another explosive move upward. creating the kind of extreme spike some analysts compare to previous historic commodity surges. Another key bullish factor is the possibility of a physical delivery crunch. If enough buyers demand real physical silver, bars, coins, or industrial-grade material, warehouses and major vaults could run dry faster than expected. This scenario becomes especially dangerous when investment demand and industrial demand collide. If manufacturers start competing directly with investors for scarce metal, the price could disconnect from futures markets entirely. That's where the largest and fastest price spikes typically occur. It's the same type of imbalance that pushes commodities into extreme territory when markets break. But not all scenarios lead to a runaway surge. The next possibility is a more moderate baseline outcome. In this case, silver continues to move higher over time, but with pullbacks, sharp corrections, and waves of volatility. Investors rotate in and out. Industrial demand grows steadily but not explosively. Supply remains tight but not catastrophic. Prices don't collapse, but they don't skyrocket either. Instead, silver behaves like a rising trend commodity with strong long-term fundamentals but short-term turbulence. This scenario is the middle ground, a world where silver remains in a long-term uptrend without entering crisis mode. Then there's the bearish scenario, the one fewer people talk about, but still important to understand. For silver to drop significantly, multiple things would have to happen at once. Global economic conditions would need to stabilize, inflation would need to cool, industrial production would need to ease, and investors would need to scale back their safe haven buying. Mining supply would also need to improve, though that's unlikely in the short term. If central banks tighten policy or recession pressures slow manufacturing, silver could see periods of weakness. Even in a bearish case, though, long-term demand for green technologies still forms a strong floor under the market. So what are the real triggers investors should watch to understand which direction silver will take? The first is industrial demand, especially in solar manufacturing. Solar power is the fastest growing source of energy on the planet, and silver is irreplaceable in photovoltaic cells. If global solar installation targets keep ramping up, demand for silver will follow, no matter what investors are doing. The second trigger is physical inventory levels in major vaults. If global exchanges start showing rapid declines in available silver, that's a red flag that the squeeze is deepening. A drop in inventory combined with rising demand is one of the clearest signs of a potential supply shock. The third trigger is investment demand, especially large institutional moves. When banks, funds, or sovereign institutions begin accumulating physical silver instead of paper contracts, the market tightens even faster. Any sudden spike in large-scale buying could push the system closer to breaking. And of course, there's JPMorgan. All eyes remain on how the institution manages its enormous silver hoard. If they hold, the market stays tight. If they add more, confidence in higher prices grows. If they release metal into the market, it could temporarily cool the surge. Their position is so influential that even subtle shifts can have ripple effects across global pricing. The final piece is macroeconomic pressure. Inflation, currency weakness, geopolitical conflict, or recession fears can push investors toward physical assets. Silver benefits from all of these conditions, not just as an industrial metal, but as a hedge against uncertainty. As we look ahead, the silver market sits at a crossroads. The world is demanding more silver than ever before, and supply is struggling to keep up. Investors, industries, and institutions are watching the same indicators, waiting for a spark that could ignite the next phase of the surge. Whether silver climbs slowly, spikes dramatically, or faces temporary pullbacks, one thing is clear: the metal is no longer a forgotten asset. It has become a central player in the global shift toward energy, technology, and security. And with the possibility of extreme price moves still on the table, the story of silver in 2025 is only just beginning.